It's interesting you say that from your perspective of being in different roles and different sectors of the industry, because my view is that a lot of retail traders spend far too much time looking for ideas, and they tend to forget what's happened after the trade. Like you quite rightly said, hey, if you're just dropping the ball every time you touch Dow or DAX, then just don't trade it, or at least put it on the back burner and go, I'll worry about that later. If you're getting thrashed at the open every time, don't trade the open. You know, you don't get to see that data until you go through all your trades and go, hang on a second, why are Monday mornings am I just getting battered? Well, you're probably too eager to get involved in the market. You're probably this, probably that. Well, step back Monday mornings. And I just think sometimes it doesn't take much time, does it, to do this? It's just doing that analysis.
And I would also say, you know, when you get a recommendation from a broker like myself, you know, I know there's a sort of cynicism that they're brokers and therefore, you know, they want clients to lose off this. And it's like, you know, the bookmakers giving a horse recommendation. But, you know, we've got a lot of pride in this as well. You know, we've got our reputation. We don't want to give rubbish trade recommendations that causes people to lose money, because people just don't listen to you and they think you're a hack. But the second thing as well, and I think what's really important about this is the logic, and learn from the logic. You know, regardless of the broker, when you're seeing these calls and these recommendations, the research notes, is learn from them. You know, like what is the logic that they're expressing, and how do they come to this situation? Because people are not right every single time. People's calls are not going to be right every single time. And I think it's important to look at, you know, one, how are they seeing price action? What are they doing? Is it a technical trade? Is it price action? Is it a mixture of fundamentals and technicals, or technomentals, or whatever they're called? And you know, understand the thought process that goes into that. And do you agree with it? You know, then the other aspect, of course, is what are they doing about protecting the risk? I mean, you know, they put a stop loss on the trade. Everyone puts a stop loss on the trade, but how are they determining that stop loss? So, you know, you can learn from that. You don't have to follow them blindly into the situation. In fact, you shouldn't do that. But their thought process and understand that I think is really important as well. And just to question, you know, what they're thinking about and how they get that. And you can learn from that, or just disagree with it completely.
Yeah, and especially if you're a new trader, just seeing the sequence of events, and like you say, even if you look at it and go, I don't want to take it for whatever reason, at least you know how you've come about that idea. Actually, you've got a research note that comes out, right? How often is that, and where can they get that?
Well, I write the Daily Fix is the name. I write that every day. You can we'll give you the link, and you can sign up to that. It's a mixture of sort of macro fundamentals, so it goes into that big picture context. I'm trying to sort of navigate clients around what's really important on the daily basis. We write that once a day, but then we also write sort of big picture pieces that come out over and again, and also the occasional sort of trade idea. If I think something looks like a high probability setup and I like the fundamental case behind it, yeah, we might put that to clients through, you know, the Daily Fix subscription, which goes into your inbox. We put some research on the website, which you can see in the market analysis section. And then we've also got our Telegram channel as well, which we try and communicate, you know, fairly regularly with clients around, you know, events. And it's not just about entry points as well. You know, one of the things that we try and do is understand and try and teach people about risk events. The idea about keeping people in the game is really, really important. You know, I think one of the things that a lot of retail struggle with at the beginning is actually understanding what is a volatility event and what's not. You know, the idea that the non-farm payrolls is always going to be a volatility event. So do I want to reduce my exposure? Or if you love trading around announcements, if that's your thing, you know, I have to leave a trade around non-farms, when, you know, I can look at the market and I can see, you know, various things like implied volatility or whatever it's going to be, that the market's just not really expecting it to move. Markets, you know, whether it's dollar yen or an index or gold or whatever it's going to be, we can see that the market's saying, yeah, this is not important to the world right now. You know, the jobs picture is not important. It's about other stuff. It's about inflation. It's about Brexit or whatever it's going to be. But the jobs picture is not an important component. So, you know, we try and also educate people about what is a volatility event and what's not a volatility event. There are some external stuff that we send out to clients, like Delcos emails, for example, which again helps people with risk management, and we can put you in touch with that. That's another thing. But it's not just about entry signals. It's also about managing the risk, keeping people in the game, teaching them to understand what is a volatility event and what's not, so that they can make that sort of educated or informed decision whether to hold positions, reduce positions, or even trade around that announcement. If it's, you know, if your strategy is of the mold where you love to trade around announcements, that might be your thing as well. But so it's not just about entry points, it's also about looking at ways that we can educate people about risk and inform people about risk as well.
Yeah, that's refreshing. So I'll put the links to that in the description below and make sure everyone's got access to those as they need to. But I think that's actually just touch on that briefly. I think that's a piece of the puzzle missing from a lot of retail traders. They don't have a grasp of the overall, because they're never involved in it. Because everyone's saying, you do your chart analysis, you look at your levels, you do this, you do that, and actually, perhaps having something like the daily fix that you offer and gives you an idea of, okay, well, what from an institutional perspective, because not everyone's going to have access to Goldman's notes, for example, but you're on the same wavelength as some of these institutions, and you can go, well, actually, you know what, non-farm payrolls, non-farm payrolls are not important. This is what's important. So this is what's moving the market at the moment. This is the engine of the market. And then at least people know and are aware. Now, are they going to make a trading decision from that if they're trading intraday? Maybe not, but at least they have a feel and more of a step back. Let's look at the bigger picture and can see from your perspective of what's happening. I think there's a little bit of, because a lot of people get concerned, I need to have a degree in economics to understand that. You don't. You just have to know what people are looking at and what's driving the market. And something like that you offer, just literally read it.
I think fundamentals is something that's really, really tough to get right when you're getting in new into the market. To actually understand what is the proper thematic, and what is genuinely driving markets at the core. I think that's really, really tough, and I think you do need to. That can take a longer time to get to properly. And we've seen people over the years who try to trade on fundamentals and they're just looking at the wrong thing, and maybe they're looking at something that maybe we thought about a week before. But what's the great thing about price action and the great thing about technical analysis is the aggregation of behaviors, and it's you're following flow, and that's one of the great advantages of working in the investment banking world and in the buy side funds who get this stuff from the investment banks. Is you have flow, you have proper flow. We're not talking about flow from retail derivative houses, but we're talking about from massive hedge funds. We're talking about from financial institutions, BlackRocks and the pension funds who are moving billions and billions and billions of dollars of capital around. One of their major advantages over you and I and retail communities is flow, and they can use that flow really to their advantage. Who's buying what and when? Is it leveraged funds, hedge funds? Are they buying euro dollar? And we can sort of work out why they're doing that, and they can get that on a real-time basis. We might have to wait for things like the commitment of traders reports that are stale data, but that's one form of flow. But that's one of their advantages. What we can do is we can look at price and we can see that flow in the chart. You just need to question what you're actually looking at and the behaviors that are happening from that. I don't think enough people look at a chart and say, oh, you've got a triangle on euro dollar. What does it actually mean? What are we actually seeing? And question the behaviors that are happening. The idea that people are not prepared to push price up or price down. And there's this kind of indecision that's coming to this sort of crescendo point and what that means. But I think that's one of the big advantages that the investment banks and certainly the buy side funds who deal with these banks get is flow, and we don't have that flow on an OTC market, and so we have to make do, and that plays into our edge. How do we get an edge when these guys have got that massive advantage? And we do that through a range of things, but certainly having a pretty good understanding of technicals, because that flow is resonating in the technicals. I think is a really important point.
Yeah, it's like the old school pit traders, isn't it? They would see exactly who's coming in, who's buying, who's aggressive, who's not, and they'd know who was doing what and when. But now we kind of see actually on the chart, and like you say, what does the triangle mean? What does it mean when we have a higher low? What does it mean when we're getting double top? And stepping back and just thinking about that, I'm in agreement with you on that one.